Good morning, Forex traders. Today we'll do the risk event calendar, gold, oil, yen pairs, dollar pairs, Swissy pairs, set up the entire week. So let's go. Boom! Living la vita loca. So good morning. How are you? Comment allez-vous? Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you're new to these webinars where I teach you technical and fundamental analysis in the live market and you are enjoying these, maybe you're new, but you've been to a couple, and you want them to be in your life, you should visit TradersWay.com and pay it back by opening an account. They make this available to you for free. So you open up a demo account. You choose from a variable spread, a fixed spread, or an ECN account. It's just part of the process, super easy. Pick what you want, and you get going. Now you can try out our execution speed, the spreads, the swaps are amazing. We have world-class customer service. You get me free for every day, so give it a shot. Allow us to earn your loyalty and respect, because we want you to become a successful currency trader and then start a successful currency trading business. And meanwhile, Traders Way can be the prime broker for your successful Forex trading business. Pretty neat, right? So how can you also be involved? Well, you can first of all, subscribe to the Forex.Today YouTube channel. You can click little thumbs ups on the videos. Most importantly, I think you should leave comments. If you are not being notified on a regular basis from YouTube, sometimes it's hit or miss on their notification system. You can also visit twitter.com/FXBootcamp. When I hit start stream, I send out a tweet. So you can get a notification that way. So there's lots of ways to be involved. The best way really is to ask questions, right? Just ask questions. Just remember to treat everyone in the chat with respect. They are our colleagues, our comrades. Remind yourself that this is our office and we expect professional behavior. I think that's about it, eh? Oh, for sure. So let's zip over here, and I suggest we start with going through the calendar. So here I am at Forex.Today. Here we go. Guten Morgen, Polly. Got to change this. This is almost 10,000 subscribers now. All right. Well, let's adjust all of this. Let us go to high impact only. Thins the herd pretty quickly, right? Call the herd. So what's going on? Nothing. I don't really care about durable goods. I don't really care. So anyways, that goes all the way to Thursday. Norwegian GDP. Okay, not really on the top of our list. We're not big traders on Norwegian krona, but you totally can. It's just not something that I cover very closely. Some inflation out of Europe. What inflation? They're about to do QE to the max, right? Tokyo CPI. What inflation? And then Friday, Canadian GDP. All right, okay. Canadian GDP, right? Now today, I think we have some real estate and stuff, and there's the durable goods. I thought we had, Case Shiller's tomorrow. None of these things really matter in a mature cycle. When you're at a bottom, let's say the beginning of a cycle or a contraction of a cycle, then these things have much more meaning. And I think we will hit a contraction in the real estate cycle, but maybe not for a couple of years. Certainly, I think we have at least till next year before we see that. But the thing that you should be watching is occupancy levels, not rents. Okay. I was thinking maybe I should do a real estate course sometime. Not from like how to flip houses, how to get rich quick, but like a full bore, like the history of finance, because that's all real estate really is finance flows. The accumulation of rent, with the time value of money and appreciation, right, of asset classes and stuff. It'd be interesting to like put one together, like a true economics class, like with real models that you can do. But anyways, that's such a sidestep. I'll probably never do it. But anyways, it's more real estate's more like the bond market than you could possibly imagine. What else going on? The zoo, okay, great. European 10-year unemployment out of Euro or Germany, German unemployment. Oh, okay. This one is given a medium. I'd give that a little bit more. If there was a shocking increase in unemployment in Germany, that would be a big red flag. But what would that do? Make the ECB do even more quantitative easing. And I don't know what your opinion is or what your bias is on euro, but this will either confirm or deny that. So like, if let's say you're a bear on the euro because it doesn't pay any money to own it, that kind of stuff, you can just simply be a bear. And you think there's more quantitative easing coming, all that, then bad numbers on German unemployment would really confirm or deny your bias, is all I'm saying. So that might be interesting. I might give that more than a medium. I might give that more of a high. Current account out of Canada, initial jobless claims, GDP. Okay, we know that's a doozy. But it's very backward looking. That's the thing. It's very backward looking. I think it's an interesting number, but everyone is already focused on the next GDP, right? PCE is important. I would give this more than a medium. So on the calendar, it says medium. I'd give this more juice than that, more love than that. PCE is the number used by the Fed in their models. They don't use CPI. And you might have to go back a month or two or three, but I did discuss the difference between CPI and PCE in a previous webinar. If you weren't there, you should have been there. Yeah. Japanese unemployment rate. Okay. Interesting, anyways. Yeah. So European or Italian GDP. Your European unemployment rate. Okay, yeah, not as important as the German one, but I guess it'll be on trend. But when you're 7.5, like think of it this way: when it's been 10 or more years since the global financial crisis, and your unemployment rate is still 7.5, what does it tell you? Well, they have a different economic model than the Americans. That's all it means. I'm not saying good or bad. Now, I sort of disagree with their model, but there's some very nice upside benefits to their model. So, for example, when you travel through the mountains of Switzerland, you don't find a Kentucky Fried Chicken at every stop, at every road exit. I kind of like that. But anyways, the economic model, one of the consequences is constantly high unemployment. But if you have a job, it's going to be a good job, and you can keep it forever, and there's going to be great benefits, and your kids are going to go to college for free and stuff. But that's why you have large unemployment. And then another consequence is you're a kid, you turn 20 years old, you want a job, and guess what? There are no jobs for you because there's no one ever gets fired. No one ever retires. The jobs are so great. The benefits are so fantastic and so easy that you just never quit your job. So you go to school and get 19 years of education because that doesn't cost you any money. Therefore, taxes have to be high, and they're not good, not bad. It's just a different model. But 7.5 is ridiculous. That would be like near depression, and yet it's been 10 years since the recession, and it's still there. So it's just a consequence of their economic model, which I kind of like. So I've taken lots of classes on it where you tweak this and you do that, and there's consequences to things, right? So you're like, well, I want a little more. I want a little more, social welfare, but that's going to turn this other thing down, right? So to pay for it, you got to turn up taxes, and then, it's just, you got to find your balance, right? You got to find your balance. So it's not good nor bad. It just is or is not. All right. So you guys want to do some technical analysis? Cool. Anyone risk on? If you risk on, you can see nice little opportunity that's come and gone. Is that going to draw? Let's see. No, it's not going to draw. Why won't you draw? Oh, now it will draw. No, it still won't draw. I want to draw. Glitch. Come on, let's try this. Oh, I probably have to click. That's a highlighter. Where's my pen? Pen selected, won't draw. All right, hang on, everybody. Hang on. Okay, I gotta restart this. By the way, my new computer screen is arriving on Tuesday, so maybe on Wednesday I'll do an unboxing. Never really done an unboxing before. But I'm looking forward to it. My eyes are looking forward to it. I said eyes, not arse. All right. My arse. What's up, Joey? JP in the house. You don't like that? Joey says no unboxing. All right. Well, that's easier for me. So anyways, okay, you see the pattern here that someone's doing, right? Calls this a bottom. It's not really a bottom until there's a higher high. So there's the higher high, new consolidation. So we've been calling this a step up, remember? And then it steps up to the next level. And bulls would be thinking this, right? And then probably consolidate up there. For 10 days. Yeah. Oh, I missed the first one. Yeah, well, Brooke and others seem to be selling and making money, or selling and getting knocked out at break even. Well, at one point you might want to say, why am I selling? Well, I see this, right? So this is a timing issue, right? This is a timing issue. It shows the risk of selling after a higher high. That's all. So I would be more aggressive, let's say, after a move like that. And the key part here is, let's do it this way. This is the move that you want, okay? And after that, you're more aggressive. Selling highs. Like you have to ask yourself, when do you sell rallies? It's not that you sell at resistance. It's that you're selling rallies in a downtrend, right? One, it had a lot to do with the markets on Friday. The stock market in the United States was way down at the close. And then there was lots of news over the weekend about China and the United States coming back to the negotiation tables, to end the global trade war. And that impacts emerging markets. Now, it did move like redonkulous, right? So if it's more than that, I'm not sure. I mean, I didn't read through Turkish news. I read through American news. So I always see, a lot of emerging markets just are punished because they're emerging markets. But if Erdogan has done something on top of that, I wouldn't be surprised either. But if you don't know about it, if you couldn't find it, then it's probably just a consequence of the stock market. Like, didn't the stock market drop like 400 points on Friday? And then it opened down another 300 points in Asia. I'm assuming you traded Asia, right? So Asia opened down 300 and then rallied, and now we're up like 150. So it was like a 500 pip rally since Asia opened. But I'm assuming you guys are all on that, right? like that move on Aussie Yen. That's the one that comes to mind. Aussie Yen opened way down at 70. Check that out. Okay, so remember, I was long here or something, right? Then I got knocked out on this drop. So Asia opened down. I got knocked out of break even, but don't cry for me. I got like 2 weeks of carry. Doesn't add up on the short run, but on the long run, if you keep doing it, it does. Then it dropped all the way down to 60, right? And I had to wait, but anyway, so I'm back in. No, I'm back in here, right? So it dropped. I got knocked out of break even. I caught it like 100 pips lower. It actually dropped down in here, so I had to wait for this. But thank you, Asia, right? Thank you, India. Thank you, consequence. And you're like, yeah, thank you for silence. Anyways. Yeah, so anyways, a little pachow. But yeah, you can see, like, we were here Friday, and then by Monday, look at this. We had dropped, this is just below 70. So this was, let's say, 69.80 or something like that, going from memory because I can't see any of that. But we were at 72. So I'm sure you made a killing. You were either a bear and just crushed it, or you bought back. Now, I would have liked to have said I bought that, but that's dangerous to me, right? That's dangerous. I need the up and the back and all that kind of stuff. So I'm assuming when you're talking about emerging markets, why did it move and stuff? I'm assuming you looked at your charts and saw most of the markets moved quite well. Okay. Yeah, Brooke, plausibly, but like things are happening where if you're a global portfolio manager, you just don't know where these policies are as far as trade and currency valuations and stuff. So there's a lot of people getting in, a lot of people getting out, right? You just, but everybody here knows, and I've said it 1,003 times. I had someone go back and count every single one, so that's a fact. 1,003 times. I've said you must be at your charts. Let's say at your, charts, fine, charts. When the market opens on Sunday. For me, it's Sunday, 5 p.m. I'm at my desk. If you're not at your desk, you're not doing your job. And you're like, Wayne, well, that's middle of the night, or Wayne, that's in the middle of the football game, or Wayne, that's when I do my barbecue, or Wayne, that's blah, 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 blah. Now, if you said, well, Wayne, I was in a triple bypass heart surgery that day, I'm like, okay, you can get the day off. But the next Sunday, you better be there. But like like up, down, down. Like if you're missing these, you're just not doing your job, right? That's all. And look where the market, it gapped down. Really, if you were aggressive, this was a buy for you. absolutely, and you should probably be on a second one in there. But whatever, I wasn't that aggressive. But anyways, like you need, right? Yeah, 104, write it down. Okay, it may not be factual. I didn't actually have someone go back and count. But anyways. Okay, well, start at swing.fxbootcamp.com. I think, right? You're talking about swing trading? All right, so look, I think I have it open. Hang on. Yeah, okay, I'm open. All right, so for those that joined the swing trading group, thank you very much for joining. This is what the members area looks like. Here's Friday's recording. Here's the swing trading course that I put in there, including, and there's the login link. So that it's nothing fancy, but it works nice. So the question was, hey, Wayne, where is the login? If you didn't save the login, how do you get back to the login? So let's go to swing.fxbootcamp. And there's a button at the top of the screen, login. Let's see, it should work. And it logged me in automatically. So there's the get into the webinar, right? There's the swing trading course, and here's Friday's webinar. Okay, so I think it's recording. Let's start. Okay. So there you go, Keeney. Keen. Does that make sense? Cool. Ron says, which was what? All right. Which was what? So anyways, there's Aussie. Let's take a look at like all the Swissy pairs. I like the Swissy pairs though. Well, Siegfried says, I thought it would be risk on, risk off scenario. Well, that's all it is. You're right, which was Friday's webinar. That's true. Yeah. So risk on, risk off. Risk on just means like let's simplify things. Risk on means Swissy will weaken. Risk off means Swissy will strengthen. Okay? So another way of looking at that is if the market, remember, when I say risk on, risk off, that means everything, the entire global market. Okay? Okay, if the entire global market is risk on, which is a good thing, then this pair will go up. Now, it has to also do with how strong the pound is, like how much risk, how much investment, if you want to look at it that way, how much investment is going to the UK. Okay, not only is the market risk on, but then how much of that risk is being deployed, and by risk we mean capital, money, how much money is flowing to Great Britain. Now right? So risk on is the whole world is happy. Well, we should say the OECD countries are happy. Where are they deploying their capital? right? So they're taking money out of their Swiss bank accounts and they're deploying it into London because there's some good deals like real estate deals, for example. Okay. But if it's risk off, they're taking their money out, right, out of the market, out of London, and they're stuffing it back into their safe Swiss bank account. And so this would be global risk off. And of course, this would matter. The global risk off creates the Swiss franc strength. And then how risky is Great Britain versus other investment opportunities around the world would determine how far the pound Swiss would fall. But the risk on, risk off in general is really only talking about Swiss franc. Okay. Yeah, you wouldn't be able to join the swing trading group and then log into the live coaching and yeah, one is for performance coaching, right? And the other one is for swing trading. Yeah, much different. All right. So anyway, so if you were risk off and you thought the stock market was going to fall again over the week, over the coming week, you would have a trade plan that looked like that. Now, while you're above this area, that's aggressive, isn't it? But while you're below that area, it's less aggressive. In fact, maybe it's safe. I wouldn't say safer, but now you're trading lower high, lower low, and then a lower high, right? And bulls are better off, right? If you're a bull, you bought low, came down, bought again, right? Up here. So you're just buying again. And you're expecting this some way, somehow over the next 7 days, or really 5 trading days, to be higher than this. That would be your assumption. That's why you would have invested, right? No, I have not covered gold yet, Alejandro, but I will. Yeah, swing.fxbootcamp.com, the same site you signed up for. Paul says, COT says, no bulls, but just less bears for pound. Cool. Well, that's the beginning, right? That's the beginning. Because then that creates vulnerability in the bearish trend. So if bulls do come back to the market and buy, now you have a change in trend. Oh, hey, no problem, Alejandro. Hey, thank you, Paulie. That's good information. Thank you. Appreciate that. So imagine this, guys. Imagine this. You're a billion-dollar portfolio trader. How quickly do you get in and get out of these trades? Are you using a 1-minute chart to make decisions? A 5-minute chart? You have a billion-dollar portfolio. Billions now. Do you drop 2,000 standard lots on a trade and trade it for 22 minutes? Or are you using like daily and weekly charts? What do you think? How do you look at the market if you're managing billions? Do you want to make 19 trades a day? Or are you trading something like triple top, let it fall for 6 months? Okay. So I want you to think about this. I want you to think of your competitive advantage as a professional trader. When you start your trading business, when you're trading other people's money, when you're trading your own family office, so to speak, what is your major advantage? Do you have a research team of 300 people with, PhDs? Do you have billions of dollars? Can you hire consultants to come in and tell you what you're doing? What you should be doing? Do you have massive infrastructure? And the answer is no. You're trading in your kitchen on your laptop or something to that effect, right? So what is your skill? What would you do? Like if you read The Art of War, for example, and I start my book by quoting The Art of War, right? What do you do? Well, you resort to guerrilla tactics, for example, right? Sahai, before you start criticizing by how many indicators I have, just let me, well, take the opportunity to get to know me, get to know my trading style, and get to know why these indicators are there. But don't be critical just by coming in, okay? Just chill out, relax, be part of the group, okay? I don't have a lot of indicators here. This one's telling me it's down. This one's telling me it's down. That's it. That's all. Don't worry about it, right? These give us targets. I mean, it's not complicated. Just relax, bro. Okay. So, anyways, if we're using more of a guerrilla warfare tactic, that means we're quick and nimble. And we're not using daily and weekly charts. We start by analyzing trend on a 4-hour, but that takes me, 12 seconds? And then we start dropping into smaller time frames and say, okay, I know I want to buy or I know I want to sell. So now I'm identifying prices for me to do that. What would be the appropriate prices? And I might say, well, this is a bullish area and this is a bearish area. Cool. So now I've done that. So now I can drop into a smaller time frame and say, if it comes into here, this zone, this is sort of a sell zone. And if it comes down into, this zone or this zone, it might be a buy zone, so I might buy at those prices. So you mark those down. Oops, you mark those down. And then you drop into an even smaller time frame. And you're very, very refined, right? It's hit and run, hit and run. Even if you're only in the trade for less than a day. Some of you guys are still in your trades for like an hour. Some of you guys are still in your trades for 4 hours. I'm also trying to get you to consider being in trades for a couple of days, maybe, God willing, a couple of weeks, right? You know what I mean? So the longer you're in, the bigger the trend you're going to need, right? And that's all I'm talking about here. So you can see the bigger trades, but you're going to probably end up being in the smaller time frames, and that's your competitive advantage, right? That's going to be your competitive advantage. So this is our calling. When you make money, who is it coming from? Other retail Forex traders? I think most of those guys cancel each other out constantly. They're like piranhas eating piranhas. Okay? Bankers, I think bankers just do what they're told. Remember, at least in the United States, there are no prop desks anymore. They don't trade Forex to make money. So it's not really banks either. It's hedge fund managers. So you're going to live off the slothness, the gluttony of hedge fund managers. So when someone says, hey, so what do you do? You're like, well, I live off the slothfulness and the gluttony of hedge fund managers around the world. That's who we're after. You're not going to beat a bank, because remember, a bank trades both sides. They make the spread. That's like, I'm going to beat the broker. Whoa. No, brokers are offering a service and you pay them for that. It's the spread. That's it. Like, you can't beat them. You need a broker. And if you have a good one, they enter your trades really quickly so that they don't slip you, and they just charge a standard fee for providing a service and all that kind of stuff. So, like, that's not what you're not after your brokers, and you're not after the bankers, really, because they just do what they're told. When Coca-Cola says, all right, DBS, send money back to Coca-Cola in Atlanta, and they withdraw it from Singapore, and they send it back to the SunTrust Bank here in Atlanta, and that's that. It's transferred. They just do what they're told, and they charge a spread. Now, the funny thing is, a bank charging Coca-Cola to move Coca-Cola's money from one Coca-Cola bank account to another Coca-Cola bank account might charge them $30 million. I mean, they could just charge them $25 for the SWIFT fee, but for some reason, they're like, ooh, this is going to cost you. But that's not our enemy, is it? But I think of hedge fund managers that, they get large institutional investors that give them money, and at some point they become like banks, right? Where there's so many traders and there's so many researchers, and the money seems to go to the same groups, right? So why does one hedge fund receive $1 billion investment, and why didn't it go to another hedge fund? Well, because that hedge fund already had 10 billion. Or 20 billion or 100 billion, right? So they're like, well, so the one with 100 billion always gets more billions. It's not the smaller ones. The bigger ones get bigger and bigger and bigger, and everyone else can't get the money because they're not big enough, right? Investors say, well, I'd like to invest in your hedge fund, but you're not big enough, so I have to go with this one because it's giant. So it gets more giant, right? So it becomes, top heavy, if you will. And it's those hedge funds that lose their nimbleness. They become slow, right? They're the ones that they are the COT data, right? Large institutional investors. And that's why we separate retail out of the COT data, and we separate the hedgers and non-speculators. We get rid of all of those guys, and what we're looking at is just the big, the fat, the slow, the lazy hedge fund managers, and that's where we make our money. And really, they say, a hedge fund manager says, guys like us, we're just liquidity events. We just provide them with liquidity. But we'll say, hey, look, if you dump in these trades at the wrong prices, you're going to make lots of little minor mistakes. Now, a little minor mistake to a hedge fund is millions of dollars, right? So in my book, I think I talked about the 800-pound gorilla, and that there's no way you're going to be able to fight an 800-pound gorilla. But you can be a cheeky little monkey. So I said, in the book, I say, let the gorillas climb up into the trees, grab all the bananas, and they grab them all in their hands, right, in their arms, and they come down the tree, and they're dropping bananas everywhere. I'm like, hey, you don't have to go up into the tree. And you certainly don't want to fight a gorilla either. Going up the tree is dangerous. Fighting the gorilla is impossible. You will die. But if you hang around the fat and the lazy gorillas, they're going to drop enough bananas all over the place that you just pick up the bananas. Run in, grab the bananas, run out, and you'll be fine. Grab bananas while they're sleeping, you'll be fine. And that's really what we're doing. Right? That's how I want you to think. Who's your enemy? Who are you competing against? Well, in the beginning, when you don't know how to trade, you're fighting the other retail traders. Because remember I said piranhas eating piranhas. Or even worse, chimpanzee wars. Have you guys seen that? Troops of chimpanzees, full out war with weapons and everything, attacking another troop of chimpanzees, and they skin them alive, and they rape them and humiliate them. You're like, what? So anyways, you don't want that either, right? So what you got to first do, obviously, is stop fighting other chimpanzees and get in the real game. What's the real game? Living off the sloth and the gluttony of the 800-pound gorillas. Stop fighting other chimpanzees because they broke. Yeah, is that right, Joe? Get out of here. Yeah, you know what? That's weird because my brother worked at a monkey farm too. What the heck are you talking about, Joe? A monkey farm? Oh my God. Holy smokes. A monkey farm. Legit gang wars. So anyways, Joe and I have to sit down and have a cocktail and I think 5 cocktails and a cigar. And I want to know about these monkey wars. Anyways, yeah, can we do EuroDollar next? Yeah. I kind of hinted toward what we should be thinking about that. But yeah, let's get over there. Holy smokes, pure mathematics. So as a warrior, I'd like you to join my guerrilla warfare. But in this case, we're at war with the gorillas, right? 800-pound gorillas. So it's truly guerrilla warfare. And we're going to be the quick, the nimble ones that gather bananas and stay alive because we're smart and we're fast. So I'd like you to join my army. Is that right? Would be the right word, right term? My guerrilla revolution. That sounds better. Who wants to be a revolutionary guerrilla? Well, we're not gorillas. The revolution is against the gorillas. But anyways, it's complicated. Someone come up with a good term. What are we? Freedom fighters. We're guerrilla freedom fighters. Well, it's even bigger than that, though, Alex. That's a good name, but it's even bigger than that. We're not talking about like a corporation. We're talking about something bigger than that. We're talking about like your destiny. That's what I'm thinking. Right? Something bigger than that. I was reading something the other day. It compared the campaign slogans of major candidates for president of the United States going back to George Bush. And the ones that always won talked about a bigger level of change, right? A bigger level of change. Even Trump talked about make America great again. Do you remember what Hillary Clinton's was? I'm with her. You see how self-centered that is? And she didn't get the vote. It was self-centered. I'm with Hillary. It's like self-worshiping. I'm with her. Now I get the her can be looked at different ways, and I get it. It is powerful, and I don't think she meant it in a self-serving way. But she didn't say make America great or make it great again. It didn't talk about everyone's life improving. It talked about I'm with Hillary. I'm with her. But the thing is, so now you're like, hey man, I love Hillary. How dare you? Whoa. Then back up. Look at what Obama talked about. It talked about change for everyone, change for society in a positive way. And what was the other message? Who cares? But it was, again, not talking about change. It was, right? And you go all the way back. And then, of course, Biden comes out. And what did he say? His new thing is like, I'm the one that can beat Trump. Once again, it's self-centered. What the heck? What happened to like making my life better? Who cares about you and Trump? Like, dude, come on. Talk about changing the world, making it a positive place, right? So anyways, it's just funny, right? So that's what I'm talking about. Like, I'm talking about more than a corporation, right? I'm talking about a revolution for your life. How can we use Forex to change your life, change the life of your spouse and your children and your mom and your dad and your brothers and sisters and your neighbors and your friends and your community, right? Like, that's what we have in front of us, right? And if you don't understand, I really want you to think about it at some point. You have something so powerful in front of you that all you have to do is learn technical analysis and some fundamentals. But on top of that, you have to have incredible patience and unwavering discipline. You need to be hardcore, right? Truly like a Marine or a Green Beret, right? But if you can do it, you're changing everything. This isn't about getting rich. Who cares about getting rich? You will make money in Forex, and all of a sudden, all your like money problems go away. Now what? Now what are you going to do? So you're still going to like try to get rich? You're already rich. Now what? Okay? Okay? So anyways, that's what we're talking about. So what sort of, if we're going to take from the greedy and the fat and the slow, like the sloth and the gluttony of hedge fund managers driving their yellow Lamborghinis around, then what's the name of our revolution? Or how do we combat? How do we band together as this community of like-minded people to challenge in a safe way, right? Not challenge, but take. How do we take from an 800-pound gorilla without getting killed? Alex, yeah. Anyways, all right. So EuroDollar. Okay. I'm looking at it on a 15-minute chart. You can look at it here. There's not much trend here, but do you notice all the horizontal lines I drew? Do you remember what that was about? Front running next month's pivots. You don't remember doing that, huh? We did that last week. I know, right? We talked about it. Was it? It might have been as far back as Wednesday. Pure mathematics says you don't. Well, no, you don't fight them, but you can take from them. I'm talking about taking their bananas. Okay? So that's that. So that's interesting here, right? That we talked about this in the past and we said this is where a bottom would form. And I'm like, for this reason, for this reason, for this, I have like 3 reasons drawn down here, right? And look what happened. So let me zoom in here. Oh, what? Now, what did we talk about last week? There's always a logical reason. Oh, this is the Trump tweet. Oh, this is the blah, 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 blah. There's always a reason. But in my humble opinion, or not even that, I always find it fascinating that these things always happen at exactly where you would expect them to happen. Okay? Embezzled bananas. No, I don't do Renko. This is what I do. So anyways, that's interesting, right? Now notice, where are the bears supposed to sell? In the training course, we talk about this, don't we? That's where a bear would sell. I didn't say here, and I didn't say here, and I didn't say here. and I didn't say here, and I didn't say here or here. This is what it says in the training course. This little area here, right? Cool. So now we have to decide, and this is your opinion. I don't know any more than you. So now you have to decide, are you buying a role reversal or are you stuck in the middle? So because we didn't make a true higher high, because remember, look, there's a previous high. Because we didn't make a true higher high, we're basically still in a range. Okay? And you need to be deranged. So if we were trend trading, and a trend, by the way, is up, down, up, right? So you're doing this. But if you don't have a higher high, you're not in a trend. So if we were trending, I would have no hesitation on this. None whatsoever. Fire for effect. Not a blink. Right? I'd snipe that. Now we got to be a little careful because we haven't made a higher high. So it's not a higher low. It's the middle of a range. Because where's the low? Here's the low. So here, But if you're a bull, one solace, if you will, is we know this is a double bottom that we predicted middle of last week. You understand? Okay. Double bottom. So maybe you're like, well, this is the higher high after my double bottom. Then that's your bias. And you need to now use technical analysis to confirm or deny. Does this look like a buy at the moment? No. But let's fold in some swing trading. If you were going to be a buyer, where would you buy as a swing trader? This area here. And you're like, oh, well, that ends up being a role reversal anyways. Cool. Okay. So, decision-making time, what do you do? There's a top, pretty logical. Here's way up. Oops, didn't want that. Here's where we are. Here's where we are. Okay, and then here's where we were. Can you see how there's like step-ups, if you will, like we've talked about in the past, right? I think we can agree this is something like this. So now you have to decide, is it that or is it that? Okay? And notice what we're actually talking about now. Buying at the central or buying at the M2 next month. Ali says, "Don't trade the euro; it's a waste of time." Well, first of all, I don't like the comments. I'm not mad, but it's not a constructive comment. Like that doesn't make any sense, right? Right now you should be talking about. You should say something like, the policy of the ECB is. And therefore, you are bullish, bearish, or neutral. Does that make sense? If they do QE again. Yeah, well, in that case, you just sell the euro. Like, so you made a comment, something about waste of time. Like, that just doesn't make any sense. It's not helpful to you, and it's certainly not helpful to anyone in the group. So I want you to instead, Ali, analyze the central banking policy of the bank that manages the value, basically, of the currency. I don't care what currency it is. So don't say, oh, I hate the Aussie. Like, don't say that. Or you can't trade the CAD. Like, don't say that. I've had people say, oh, you can't trade the CAD. It's called the yo-yo. That's stupid. What the heck are you talking about? You analyze the policy of the central bank, and you create a bias. And then from that, you use technical analysis to confirm or deny the bias. Price manipulations. Well, e-money Forex, that's what central banks do. So you're basically asking me about fundamental analysis. And of course, that's the basis of fundamental analysis is price manipulation. Another way of saying it in less negative connotation is monetary policy. So look, put it this way. If China wants to manipulate their currency to make it weak so that their products are more competitive around the world, then sell the currency. Like, there isn't good or bad. There isn't right or wrong. But if the policy of the central bank is to weaken the currency, then sell the stupid currency and make money, get filthy stinking rich, right? But don't say to me, oh, the euro is stupid. Like, euro is just money. And the money and the supply of the money is controlled by the central bank. So if the central bank says we are going to weaken the currency, then sell it. That's it. Like, that is beautiful. That's what you want. If the policy of the central bank, the People's Bank of China, is to weaken their currency, then sell their currency, make money, make profit, right? That's what it is. Yeah. So what's happening, though, what you're saying, Ali, is different. Don't talk yourself out of trades. What you're saying is euro and Aussie have both been weak. They're not. I don't believe it's that way right now, because I'm a buyer of Aussie, right? But in those situations, yeah, be neutral, and that's cool. But don't say like trading them stupid and all that. Like, again, that's not analysis, right? We want to talk first and foremost as if we are analysts. So your analysis shows you that these markets are not trending. Now, I might say, oh, well, I just did a regression channel, and I said, well, it's trending down. Okay, cool. So we may disagree, right? That's fine, and you don't have to agree with me, right? But what I'd rather you say is you're neutral for these reasons, and what I've told you as I want to use this tool now. What I've told you as an analyst is that I don't like the euro. I believe the policy of the central bank is going to weaken the euro. In fact, in September 12th, is it? They're going to announce more QE. So that would weaken the euro. So I would go in there and say, well, we're about 3 weeks away from the euro really possibly losing value. And I believe we're in a downtrend. And I believe this is a role reversal. So this whole area for me would be a sell zone. Plus, looking at next week's pivot points, you see how I'm folding all this in, guys? Looking at next week's pivot points, I want to get short somewhere, after all that, right? I want to get short somewhere around here based on price action, based on pivot point, right? Based on trend, and assuming an upcoming policy that will weaken the currency. So I'm talking about technicals, multiple different strategies using technical analysis, and projection of fundamental policy leading toward a bias that gave me a price in which to sell. And then you're like, oh my God, it hit that price and dropped like a ton of bricks. I know, right? So that's what I'm talking about. Or you say, Or you say, I believe it's neutral for some reason. You put that other game. But never say whatever that it is that you said, right? I'm just saying bring in the be professional in what you do and what you say. And I'm not like slapping your hand because you said it in the group or something. I'm training your brain. And when you say things like that, it's unhelpful to you. And I've even forgotten who said it, so I apologize for that too. Oh, it was Ali, right? It's more of you're training yourself. So when you say things like that, you're not training yourself properly. Most likely it will lead to failure, because what will happen is you'll talk yourself out of good trades and bad trades and stuff. So I want you to work on your communication where you say, I've analyzed this, this, and this, and therefore I am neutral. You might say, I am neutral Euro Aussie. And I say, that's really cool. You're neutral Euro Swissy. I say, that's really cool. I am neutral Euro Kiwi. I say, that's really cool. So on and so forth, right? But never, ever, 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 ever say that's you're trading the euro stupid, or you can't trade the CAD, or I've heard all kinds of nonsense over the decades I've been doing this. Like, it's not helpful. You got to stay focused on the analysis. Like, I honestly, I don't care whether I'm buying this EuroDollar or selling the EuroDollar. I honestly don't care. Everything gets converted to dollars. Then I exchange my dollars. Like this weekend, I exchanged my dollars for taking my family to the Ritz-Carlton on a beautiful lake. And we rented a boat and we swam in an infinity pool. We had beautiful dinners and boom, I just converted my currency into something that I desired. That's all. So whether this goes up or goes down, I still get paid in dollars. Don't matter none, right? So to me, it's just an asset class. It's just analysis. It's just trading the ECB versus the Fed and getting the timing right. It's like, it's nothing. I really don't care. Okay? And remember, a lot of these trades I set up for you last week in anticipation of next week. You see what I mean? Like hardcore stuff, right? Yeah, he says something. Any person who executes a buy or sell is manipulating price. Well, but a central bank though is different, right? Heath, where like the Fed in particular is very different than any other central bank. They can manipulate the market without any money. The ECB is in a more delicate situation because they actually require money. They're not the reserve currency. Their debts are so it's different. That's why Draghi had to find a way to bail out Greece without spending any of his euros, and he did an amazing job. One of the key moments of my trading career is when he said, "I will do whatever it takes." That's all he said, and it changed the world. How smart is that? So he can't do what the Fed can do. No, the Fed can just create it, right? But not the ECB. So anyways, guys, I want you to look at all of these as just asset classes, right? Like for example, would you buy a Ford bond? Or let's say, would you not buy a Ford bond because you like Chevy trucks better? Oh, right on, Ramiz. Thank you. So, like, I would separate whether I'm a Chevy Tahoe guy versus a Ford F-150 guy. I would separate the two. Like, I really don't care. I care about the cash flow and the risk associated with it that Ford is offering me, right? So, right? So, anyways, I want you to be like that. Tell me the analysis and how you're going to trade it. And if you say I did the analysis but I'm neutral, that's a legit answer. You say, dude, did you see the Australian trade balance? And when I look at that upcoming, QE out of the ECB, I'm so neutral on Euro Aussie. Now, that would make a ton of sense, right? And I say, that's some great analysis, yo. All right, so here's what, CAD Yen. So I got knocked out at this one, break even. Remember, I was long, I don't know where I was long. What was it, a month ago I bought it? So I got knocked out, and then it dropped down to here, made a higher high, and I bought it here. Yeah, you're welcome. Look at that. Nice! Notice how on both those trades, I didn't take the aggressive trade. Why? I'm not a degenerate gambler. I'm a stutterer, apparently, but not a degenerate gambler. That's cool, right? What would Wayne do? Is that what I teach you to do? Well, then good. Nice. Notice, though, too, right? My swing trading crew can see this, and then this, and then this. These are all neat, right? So this is the bounce at the S, which is not a desirable entry, but that's a desirable entry. Cool. Like, look at that. I'm on the M2. Now, vulnerability, right? Now what? Well, we're in the role reversal, and we're right on the sell pivot. So, by the way, if you guys are bears, and you're like, dude, this guy is nuts. How could he be buying CAD Yen? Then you should have sold it about 15 minutes ago. I can't imagine being a currency trader and not knowing that. If you don't know that, you don't know how to trade. That is awesome. If you guys sold that because you're a bear, congratulations. I'm fighting old analysis here, and I know I'm vulnerable. But if you've flipped and you're like, I'm straight up hardcore bear, then you made your analysis. You did your job. You did your job well, in fact. And you didn't chase this down. You said, I'm going to let this come up, and then I'm taking the next shot off of price action. This is just pure price action. And the weekly swing. Like, if you just sold this because you're a hardcore bear and you're like, yeah, I'm probably going to be a bear for a while now. Like, that was a big deal. You don't believe the Trump tweet and all that kind of stuff, which actually I don't either. I think Trump sent a tweet to prop up the stock market. I think he literally did it to prop up the stock market, which means it's a house of cards, right? So if you're like, I've done the analysis, I know the news, I've done all this, I've done that, I'm big risk off, this is my sell zone, and you waited 15 hours for it to retrace, and now you got the price you wanted, then you dropped into your 15-minute, and you got into there, and now you dropped into your 5-minute, and you're trading this rollover, or you're going to trade the rollover, and you're looking for something like this, then you're doing your job, and that is beautiful. Very, 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 very beautiful. Joey, go to youtube.com/FXBootcamp. Then click on, what do you call those things? Playlists. Click on playlists. And then click on the free training course. Okay. Okay. Has anyone made this trade plan? Is anyone going to trade it south? See, I'm indifferent. I don't really care. I told you guys last week that I don't think it's going to go up yet, that there's going to be a big pullback in September. Well, there's a big pullback in August. But, you know, what we're doing is just trading bottoms. We don't have a trend yet. But, well, I shouldn't say we don't have an uptrend yet. So if you're remaining a bear, like, oh my God, Becky, look at that short, right? Oh my God, Becky. Look at that short position. Right? Oh my God. Right? Oh my God. Okay. Yeah, what would we do? Hey, thank you for subscribing, everybody. Give me time to earn your loyalty and respect before you come and go, right? Hang out today, hang out tomorrow, hang out on Wednesday, hang out on Thursday, hang out on Friday. Let's find some common ground. Okay? So that's that. Now remember, I got my eyes on next month, don't I? Do you see the other thing I'm on? I don't know if I'm right. Do you understand that? I don't know that I'm right, but I know where support is. You guys remember Forrest Gump? I might not be a smart man, but I know where support is. Do you remember that one? Wait, he doesn't say that. He says, I might not be a smart man, but I know what love is. Remember that one? Like, dude, I know this is not an uptrend. I totally get it. But where did I buy it? Like, at ridiculous support. Right? Ridiculous support. Redonkulous support. If I lose money there, this is crashing. But I won't lose money, right? If I get knocked out there, then this is dropping hundreds of pips, hundreds and hundreds of pips. But if it does want to go up, it's going to go up here. And for that to happen, I need basically this. Okay? But that's my price. Do you remember I told you that was my price 2 weeks ago? We were discussing it all sort of in here. Remember when I was lining it up here, lining it up there? We discussed it, blah, 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 blah. Blah, 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 blah. That's my price. If it's going to be bullish, it's going to be bullish there. I don't know if it's going to be bullish, but if it turns bullish, that's where it's going to do it. Not here, not here, not here, not here, not here, not here. Not here, not here, not here, not here, not here, but here. What? So if it goes up, I'm going to get paid. If it doesn't go up, I'm not going to lose money. How often do you want to play that game? Play it all day. Now, if you wanted this to go down, this is okay on a weekly basis. You should have done it last month on a monthly basis, or last week, I should say. And how many people remember last week? How many people last week remember me pointing that out? What would Tony Robbins say? Everyone agree, say aye. Right? Remember? If you're going to be a bear, this is plan A. We said it here. And I said, I know we're talking 2 weeks in advance. But if you're going to be a bear next month, right? Marina, don't go away. You're a valued member of the community, Marina. So, how many opportunities do you want where you either make money or you don't lose money? And that's kind of where you want to get, right? And you got to be smart on your entries. You got to know the right prices. So now we're only talking technical analysis. Trade in the direction that your analysis of the central bank is telling you, right? And over and over and over and over. Like, for example, right? Over and over and over again. if you had 1,000 trades like this, you know that a lot of the time you're going to make money. And really, that's all your career is going to be. You say, I think this market is going up, or you would like the market to go up. It's a little trickier when you want it to go up. Now, I'm trying to be a little fancy here and give some seasonality, but I've been punished for that in the past, and this doesn't look any different right now. We're still actually technically a little bit early, but I don't mind buying at support on big bounces and stuff. Like we hit this low and just spiked right up, so buying a dip here, I just have to do it. I'm sorry, right? So now, if it goes up, great. If it doesn't go up, if it goes lower, I need to probably walk away or readjust, which means I might stop buying until I see it turn bullish, okay? I might actually start selling until I see it turn bullish, right? So that's all we're doing. And if your analysis is correct, you're going to get paid. Okay? And if your analysis is not correct, if you manage your risk properly, you probably won't lose, or you won't lose much, but you had the opportunity. And that's really what you want, right? Yeah, but that makes sense, Paul. So you're saying through July, yes, but that's supposed to happen. You're not supposed to be swing trading in a dead market. So you're not even supposed to start in basically till September. But nothing happens in July, Paul. That's why I teach people to shoot at rabbits. Thank you, Forex Comp. Forex Comp, if you go to Amazon.com, you'll see that there's dozens of reviews that say things like, it's just the same as every other written book about Forex, which is funny because 13 years ago, there weren't very many books written about Forex, but apparently it's just like all of them, which I find hard to believe because I never read another Forex book, so the odds of that are pretty low. But also there are a few that say it's just crap. One review says it's the worst book ever written. Not the worst Forex book ever written, but the worst book ever written. Which, if you're not a writer and you'd say, well, I want to share my life experience with people, but I'm not a writer, but I want to take that risk anyways because I think my message is so important, and you write a book, it's pretty hurtful to get that kind of feedback, right? Considering I'm not a professional writer. I'm a good currency coach, though. So anyway, so if you liked it, it would be cool. Now, of course, there's a couple hundred positive reviews, but there's, so if you can leave your positive review on Amazon.com, that would be great. Is that right, Joey? All right, M2 to M4, M3 to M1. I'd like to give a greater detail than that, but I thought for sure one of those was timing your trades with pivot points. But maybe you should take one of the training courses at FX Bootcamp, huh? All right, so I could see wanting to be a bear here, and you should have plans. So a weekly bear would sell here, a monthly bear would sell here and here. Okay, so if you are still a bear, I think you should be really seriously on the ball right now. You understand that? No, it is not R1, S1. No. The only time it's R1 to S1 or vice versa is on an inside period. So if you're thinking that's how I trade just in general using pivot points, you don't know how to trade pivot points. You need to take the swing trading course. Now, if you're saying that because you took someone else's course, with all due respect, I don't believe that's correct. Okay. An inside month is really a warning. It's not a trade, it's a red flag. You're like, really? It's a bit of a red flag. It means you're consolidating. Okay? And in those situations, generally, it's not a good trade. Generally not. But you might be setting up the next period after that for a big move. And in that case, after an R1 to S1 period, then the next one's probably R3 to or S3, not and to, but or, depending on the direction of the breakout. Ramiz, why don't you take the fundamentals course at FX Bootcamp? Yeah. Tova, you need to take the swing trading course. Hello, Wayne. How would you like to advise a 20-year-old kid who just started trading for 6 months by considering? Well, you know what? Consider it as a career. Consider it like going to university. Okay? So I am now starting my 5th year of taking classes at Harvard. On Monday, well, actually Tuesday. On Tuesday, I'm starting my 5th year at Harvard, right? I'm half done my 2nd degree. I want you to think of Forex like that. I want you to take it more serious than most people here. And of course, I tell everyone that everyone individually should feel like they're taking it more serious than everyone else. If you're not even doing that, I'm not sure what's going on, right? You should be the most aggressive in learning properly. So if I were 20, I would go to one of the online sort of university type websites. There's lots of them now. And I'd start taking economics courses, intro to economics, or like principles of economics, intermediate economics, macroeconomics, microeconomics, that kind of stuff. I'd probably take 1 or 2 finance classes too. Okay? Does that make sense? So on and so forth. That's where I would go. Like, I would look at my trading as a career, and you're going to spend the next 4 years doing this as a full-time job. Yeah, someone said my next book should be on how to start a hedge fund. Yeah, actually, I don't know when I'm going to get to it, but I think that's what my next book is going to be about. How to be a professional trader. And whether you're independent or trading OPM, other people's money. Yeah, I think that's what I'm going to do. Most people have never hired lawyers before, have never hired accountants before, have never had compliance firms, have never gone through audits, have never started a company and opened up bank accounts. And, like I'm a venture capitalist. Oh my God. I did all of that before Forex, right? Like, so it'd be like a venture capitalist point of view of starting your own trading firm, right? So like I've raised millions of dollars. I know how to speak and go on road shows and raise money from sophisticated investors, from angel investors, from investment groups, from venture capital firms. I used to have a board that had, let's see, I had 1 lawyer, one banker, one HR person, five venture capitalists. But then I had a committee of something like 15 or 20 venture capitalists. You know what I mean? So I can really give a really interesting point of view on like how to raise money. We used to even have a consultant come in and talk about the psychology of your investment presentation and would critique the way you said things, the way you look, like literally your eyeballs, your feet position, your hand position while you're in your presentation. Like, you know what I mean? So I don't know if we do that as a mastermind group or if I do that as a side project or something, but that would be my next book for sure. And then on top of that, you need to know how to trade. But there's lots of trading books, so I don't think I'd even talk about a 5/8 crossover. But launching your fund, I think would be a helpful book, and put together like a weekend course where you come and meet with the experts and practice your elevator pitches and stuff, I think would be cool. And you know what? This is what I did 30 years ago. I helped entrepreneurs raise venture capital and prepared them, like literally prepared them, coached them, brought in coaches, built the platform, brought in the investors, got them to speak, and negotiate, so I had to teach entrepreneurs like how line by line, my entrepreneurs went through term sheets with a venture capitalist. He brought in his actual term sheet. This is what this means. This is what that means. On this line, we would break it out this way, or we'd break it out that way, and this is what these two things meant. And this is, as an entrepreneur, you probably wouldn't like this, but this is, as a venture capitalist, this is what we would like. So you might want to negotiate in here, and so on and so forth. So it'd be interesting, right? Peter Ward says raising capital is the hardest part. Yeah, like everyone raising capital is already profitable. So you walk in, you're like, look at me, I'm really profitable. Nobody gives a damn. And as soon as you say that, they're going to rip your trading history apart, doing things like risk-adjusted performance analysis. And you're out there like, I'm making 22% a month. And they look at it and they laugh at you. And you're like, where did I go wrong? You only know the easy part, trading Forex, right? But anyways, we'll probably get there, right? So anyways, we'll get there. Got to finish grad school first, I think, right? But anyways, how about this? Leave a comment below the video about that, like how to launch your own fund through all the business side and the capital raising side. Would that be something that you would love to see? Yeah, Pete, you need something for them to analyze. Absolutely. All right, so let's, we did Swissy, we did, let's do some dollar, I guess. Where'd it go? Let's do some dollar. Let's move this here. All right, what do we want to look at here? Pound dollar. What do you see here? I see bears. Okay, I see bears. So in that case, I would think like this. Okay, and then if you're a bull, you're going to buy this. Okay, So that's the most logical right now. So that's down this week, up next week, maybe. Okay. Now, of course, I'm looking at moving averages for that. I'm looking at pivots for that. I'm looking at a bunch of things. So, beep, beep. Aussie, okay, up to resistance here. What do we want to do here? Well, I see mostly bearishness again. Okay, so if I were a bear, I'd sell here. If I was a bull, you need, you need to catch a dip. Very often after a big move, you don't get it. But so if I was a bull, I'd be a buyer there. If I was a bear, I'd be a seller here. Done. Next. Oops. Look at that. So it was funny. Like I said, I took my family out for a weekend vacation, and we're driving through the Georgia countryside. And we got to the sign that said the Georgia dairy capital, or dairy capital of Georgia. And we're driving through, and most of the dairy farms had like head-high weeds growing in the fields and empty barns. And one we drove past, they had some cows, but most of the field was planted. Clearly not for cows. Another one had been converted from a dairy farm into a tree farm. What does that tell you about dairy prices? Apparently it's at a 25-year low. And check this out. A major export for New Zealand is dairy. Look at the value of New Zealand dollar. Way down. And I read today, or I heard today, sorry, I heard on Bloomberg Radio that 100 farms have gone bankrupt in the last 6 weeks in just Wisconsin and a neighboring state. And they said the number one reason for these bankruptcies is low dairy prices. This is the value of the New Zealand dollar 5 years ago. And this is where we are now. Low dairy prices. So I just, like, to sum it up or to review, I just drove through Georgia's dairy capital, and we saw hardly any cows. And then in places like Wisconsin and wherever the other one was, where they have lots of dairy, farmers are going bankrupt. And a major global export of dairy, and not just like, it's not much on a global basis, but as a percentage of GDP for New Zealand, dairy is super, super, super important. And look what's happened. And then analyzing the last 5 years, we can get a trend. This isn't the global financial crisis, guys. This is 2014, guys. And it ain't getting better, is it? And we're back down to here. So if this is next, goodbye, Kiwi, but it's time to go. Or we're at a bottom, right? But you better back that up with some fundamentals, son. Okay. Craig Turner says, hey, great stuff, Wayne. Right on. Thank you, CT. Make sure you guys leave a comment on the recording. Not in the chat room. That's fine. Chat room's for questions. Leave a comment on the video. So now it's like, A, comment just to show that you watched it. B, leave a thank. C, leave a question. Or D, Tell me if you like the topic for the next book. Okay. All right. Cool. All right, I'm going to go. Is anyone else going to join the swing trading group? We launched on Friday. Is anyone going to join the swing trading group, or is it done? We have dozens and dozens and dozens and dozens of people in the group. It's enough. So if you want, it's still a new thing. Swing.fxbootcamp.com. Oh, gold. I didn't do gold. Yeah, let me do gold. I'll do gold. Is it free? No, Alex, it's not free. Nope. All right. But Alex, who was it? Yeah, Alex, 2 years ago it was $1,400 for your first month. No, $1,400 to sign up, and that plus $100 every month. So your first month was $1,500. Now your first month is $500. So that's $1,000 cheaper than 2 years ago. So it's not free, but it's pretty. Okay, we got some yen strength, yo. Oh, wow, look at this. Looks like I already did it. There you go. So this is a perfect sell right there. OMG, guys, you should know this. This is the perfect trade. Oh my gosh, look at that. If you're a bear, that's sick. Now, it hasn't finished rolling over, but we're on a 30-minute chart. So on a 5-minute chart, you're certainly finger on the trigger time, huh? My gosh, look at that. I set it up for you middle of last week. That looks like Thursday, doesn't it? Looks like Thursday, which makes sense, right? If you can't see it on Thursday, you're not going to trade it on Monday. Yeah, Julie says I said it last week. Yeah, there you go. This is the scenario where it opens hot, right? And you're out of position. OOP, yeah, you know me, and down. But in this case, it didn't open out of position. It opened at position. It's gorgeous, just gorgeous. It's not going to be good for my open trades, but it will be good for follow-up trades, right? So what you on a 5-minute chart, you're looking for that kind of stuff, right? Cool, man, cool. All right, I'm trying to get to gold, aren't I? Come on, man. Come on, man. Come on, man. All right, gold. All right, what do you want to do? Clearly. So that's an OOP, like I just talked about it on Beast. So you should know how to trade an OOP. It's out of the swing trading course. This is a counter trend trade. You should have been short here like 15 hours ago at the market open. I can't do anything for you now. You're 15 hours late. There's a role reversal here. The target for the counter trend was here. So you might have a plan A and a plan B here if you're a bull. But yeah, again, if you're a swing trader, you know this. It's right out of the course. You know what to do in this situation. And your target was here, so you would have sold Sunday probably about 6 p.m. New York time, maybe 7 p.m. let's say, and you caught it off this clear. See, not only is this the weekly OOP, but it's also next month's M3, right? You know that, right? So when you combine these things, it's redonkulously, obviously a bear zone, like without any shadow of any doubt at all. So you would have put that together. But, that was, like I said, 7 p.m. last night. It's now 9:40. It's almost 10. So I've been going a long time, hour and a half. So yeah, like you're 14, 15 hours late. I can't do anything about that for you. Okay. So now the next thing is, if you think that's incorrect and you want to be a bull, now you got to start your tactical entry, right? You're not right. Your tactical analysis now is displaying this. You're awfully elevated and you've already hit weekly targets, so I don't like any of it, but price action is price action. If you ignore the pivots, it's fine, so you're thinking this, but when you add this other stuff in there, it makes it feel more like it's this. So really it comes down, this was an obvious sell. This might be a buy. This might be a buy. Maybe it's a buy zone, however you treat it. But like I said, this is a weekly counter trend, and this is a monthly sell. Right? Weekly, everyone got out. Monthly, everybody's selling. You got some risk there if you're a bull. But if you're a bull, you're like, I see the risk, but nonetheless, I'm at a buy zone. Does that make sense? And if it doesn't make sense, it's because you haven't decided to be a bull or a bear. And you're like, wait, did he just tell me to be a bull or did he just tell me to be a bear? I didn't tell you squat. That means something, and you should know what it means, is what I'm telling you. And if you want to take the additional risk and try again as a bull, you got that and you got that, but you got lots of this. So you decide, do you buy into that resistance, or should you have just taken profit 15 hours ago and laughed all the way to the bank? Don't know. And of course, I don't know what the future holds. I don't know what the future holds. Okay? But I'm already thinking SEP. And if I was selling SEP, I would have sold it here. So the next thing is, if I'm selling SEP, then I'm going to sell here and then sell, now we're talking after NFP, a lower low, and then sell the next rally. Does that make sense? Hopefully. Cool. Thank you for being on my team, everybody. Thank you for being in my life. Thank you for the hard work and effort that you put in. I hope someone comes up with a good collective noun for us starting a revolution against the 800-pound hedge fund gorillas. That'd be cool. I can sense a t-shirt coming on, right? Maybe we're like, what are we, hedge? There's our 800-pound gorilla. What are we, hedge fund hackers? Something like that. Hedge fund hackers, market hackers. Maybe we're market hackers. I don't know, whatever. So peace on earth, may the pips be with you, may our profits be above average. Please open an account at tradersway.com. You can download my chart templates for free. It's below, the link is below the video, charts.fxbootcamp.com. And I will see you tomorrow. Thank you for spending an hour and 45 minutes with me today. I know your time is valuable, and thank you for the investment of your time. Take care. I'll see you tomorrow. Cheers.